Have you ever thought about buying a home but had no idea where to start? Then this video, it's for you. Maybe you've been renting for a while and you're wondering if home ownership is even possible for you right now. Maybe someone told you that you need 20% down, or that your credit isn't good enough, or that the market is just too hard to break. I want to tell you, a lot of what people think they know about buying a home just really isn't true anymore. My name is Kat Neal. I'm a realtor here in Central Arkansas, and I work with buyers and sellers across the area, from Little Rock to Cabot, from Bryant to Maumelle, and everywhere in between. I also speak Spanish and Portuguese, so if that's the language you're most comfortable in, I've got you covered. In this video, I'm going to walk you through everything you need to know as a first-time home buyer. We're going to talk about why buying a home makes sense, what your loan options are, what they actually look like, how to get pre-approved, what the process looks like from start to finish, and what to expect when you get to the closing table. By the end of this video, you're going to feel a whole lot more confident about taking the first step. Okay, let's get into it. Let's start with the big picture question. Why buy a home at all? Because here's the truth. Every single month, you're paying rent. You're building someone else's wealth. Your landlord, they're using that money to pay down their mortgage, to build their equity, and to grow their investment. That's not a judgment. That's just how it works. And when you understand that, then the question kind of shifts from, can I afford to buy, to can I not afford to, or can I afford not to? God, that should be simple. But when you own a home, your monthly payment goes through something you actually own. So over time, as you pay down your mortgage and as the value of your home rises, you are building equity. And that equity, that's real wealth, okay? It's something you can borrow against, pass down, or cash out whenever you're ready to move on. There's also tax benefits to home ownership. Things like mortgage interest and property taxes, those can often be deducted, which means owning a home can actually lower your tax bill every year. But talk to a tax professional about what applies to your situation, okay? But it's worth knowing that homeowners get advantages that renters just simply don't. And then there's the stability. When you own your home, nobody can raise your rent. Nobody can decide not to renew your lease or tell you that you can't paint the walls or get a dog. It's yours. You can put down those roots, make it your own, and build a life on your own terms. I know buying a home feels like a big leap, but for most people, it's one of the best financial decisions that they'll ever make. And I'm here to help you understand exactly how to make it happen. Okay, let's talk about money, specifically how most people pay for a home. So unless you're paying cash, you're going to get a mortgage, okay? A mortgage is just simply a loan that you use to purchase the home. You borrow the money from a lender, a bank, a credit union, or a mortgage company, and then you pay it back over time, usually over like 15 or 30 years with interest. Your monthly mortgage payment, it's made up of a few different things, okay? It's the principal, which is the amount that you actually borrowed, the interest, which is the cost of borrowing that money, your property taxes, and your homeowner's insurance. And sometimes these last two are bundled into your payment through what's called an escrow account, so you don't have to think about them separately. Now, let's talk about the different types of loan that you may qualify for, because this is where a lot of the first-time home buyers have more options than they actually realize. Conventional loans are what people think of when they think of a mortgage. They're not backed by the government. They're offered directly through private lenders. So you'll typically need a credit score of at least 620, and down payments can start, anywhere between as low as 3% for those first-time home buyers, really. FHA loans, now those are backed by the Federal Housing Administration, and they are one of the most popular options for first-time home buyers. Why, you ask? Because the requirements are more flexible. You can qualify with a credit score that is as low as a 580, and the minimum down payment is 3.5%. So if your credit has taken some hits, an FHA loan might be the path that gets you into a home sooner than you think. Now, VA loans are for active duty military, veterans, and surviving spouses. If you qualify, this is the best loan product that's available. 0 down payment, no private insurance, and a competitive interest rate. If you've served this country, please look into this. You deserve it. USDA loans are backed by the U.S. Department of Agriculture, and they're designed for buyers purchasing in kind of the rural and suburban areas. In Central Arkansas, those are areas like Cabot, Ward, things like that. So there's zero down payment. That's right. If you qualify and your property is eligible, you could buy a home with zero money down. Each of these loan types, though, they have several different requirements, different benefits, and different costs. The one that is right for you depends on your credit score, your income, your military status, and where you want to buy. A good lender is going to walk you through which option makes the most sense for you in your situation, and I can connect you with those lenders that I trust right here in Central Arkansas. Now, let's bust one of the biggest myths in real estate right now. You do not need 20% down to buy a home. I hear it all the time. People will say, I'd love to buy, I just don't have 20% down or 20% saved up. And I get it. If you're looking at a $250,000 home, 20% is $50,000. That's a lot. But here's the thing. That 20% number is outdated, okay? It comes from a time when there was just the standard requirement, and today's mortgage landscape, it looks so different. As I mentioned, FHA loans start at 3.5% down. Conventional loans for first-time home buyers can start at 3%. VA and USDA loans, they require 0. And depending on your loan type and your purchase price of your home, you could be looking at a down payment of just a few $1,000s, not $50,000. Now, there are things that are called down payment assistance programs, and this is something a lot of buyers don't even know exist, okay? These are programs that are offered through state agencies, local governments, and nonprofits that help first-time home buyers cover their down payment and sometimes even their closing costs. Right here in Central Arkansas, programs like the Arkansas Development Finance Authority offer assistance that can make a significant difference. Some of these programs are grants, which means you don't have to pay the money back. Others are second loans with low or no interest. The details vary and eligibility requirements apply, but the point is there's help out there. You don't have to have a pile of cash sitting in a bank to make home ownership happen. This is why exactly I tell buyers, don't count yourself out before you've even had the conversation. Let's look at your actual options before we assume anything is off the table. Now, before you start looking at homes, and I mean before you even start scrolling through Zillow, you need to get pre-approved for a mortgage. Pre-approval is a process where a lender looks at your financial picture and tells you how much they're willing to lend you. It's not a guarantee, but it is a serious commitment from the lender that says, based on what we've seen, we believe you qualify for a loan up to this amount. Why does this matter so much? A few reasons. First, it tells you what your actual budget is. A lot of buyers start looking at homes and fall in love with something only to find out later it's outside of what they could afford. A pre-approval sets a realistic number from the start so you're not wasting time or breaking your own heart. Second, sellers take you seriously with a pre-approval letter. In a competitive market, sellers want to know that you're a real buyer who could actually close the deal. And without a pre-approval, a lot of sellers won't even consider your offer. Third, it speeds up the process. Once you find that right home and your offer is accepted, having your finances already reviewed by that lender helps everything just kind of move quicker. So what does the lender look at when they're trying to pre-approve you? Well, they're going to look at your income, your employment history, your credit score, your credit history, your debts, things like car payments, student loans, credit card balances, and your assets, meaning what you have in a savings or a checking account. Don't be scared by this process. Lenders aren't looking for perfection, okay? They're looking at the whole picture to find a loan that works for your situation. And if there are things that need to be cleaned up first, like paying down some debt or giving a credit issue some time, a good lender, they're going to tell you exactly how to do that, and then you'll be ready. Okay, so now you know your loan options, you understand the down payments, and you got your pre-approval. What happens next? Let me walk you through that process. Step 1 is working with a real estate agent. And yes, I'm biased here, but there's a very real reason why first-time home buyers, especially, they need an agent in their corner. A buyer's agent represents you and not that seller. They help you find homes, negotiate on your behalf, guide you through the paperwork, and protect your interests from start to finish. And in most cases, the seller pays the buyer's agent commission. So this service doesn't actually cost you anything out of pocket. Step 2 is the home search. Once you know your budget and you're working with an agent, you'll start touring homes. So making a list of your must-haves versus your nice-to-haves. Let's think about your location, your school districts, commute, size, and condition, and keep an open mind. The perfect home on paper doesn't always feel right in person, and a home that's seen ordinary in photos might actually feel like the right place when you walk through that door. Step 3 is making an offer. When you find a home you love, your agent will help you write an offer. That offer includes the price that you're willing to pay, the terms of the purchase, and contingencies, which are really just conditions that need to be met for the sale to go through. Common contingencies include financing, meaning you need to get your loan approved, and inspection, meaning the home needs to pass a professional inspection. Step 4 is the negotiation. The seller can accept your offer, they can reject it, or they can come back to you with a counter offer. This is what having a skilled agent, or wherein having a skilled agent really matters. Your agent is going to help you navigate the conversation so you can get to a price and terms that work for you. Step 5 is going under contract. Once both you and the seller agree on the terms, you're officially under contract. This is a big milestone, and it kicks off a very busy few weeks. Under contract, it means a few things happen simultaneously. Your lender is going to start processing your loan. You schedule a home inspection. The title company starts researching the property, and your agent stays on top of every deadline to make sure that nothing falls through the crack. Step 6 is closing. This is the finish line. Closing is when all the paperwork is signed, the money changes hands, and you get the keys to your new home. I'll talk a little bit about the closing costs in just a few minutes. But for now, just know that closing day is one of the best days you'll experience in this whole process. Before I keep going, I want to just take a quick second to talk to you directly. If you're watching this and you're thinking, okay, this sounds doable, I want to know more. I want to know about what it looks like for me specifically. I want to invite you to come meet me in person this weekend. I'm hosting an open house, and it's a beautiful home that would be perfect for a first-time home buyer. It's a great opportunity for you to walk through a real home, ask me questions face-to-face, and get a feel for what's out there right now in Central Arkansas. No pressure, no commitment, just take a look. I've added the details in the description below, and I would love to meet you and answer any questions and help you figure out if this is the right time for you to make a move. Okay, back to the good stuff. 2 things happen between going under contract and getting to the closing table that first-time buyers sometimes don't fully understand: the home inspection and the appraisal. So let's talk about both, okay? The home inspection is something you as the buyer typically pay for and schedule after your offer is accepted. A licensed home inspector will go through the property from top to bottom: the roof, the foundation, the electrical, plumbing, HVAC system, the windows, the attic, the crawl space, all of it. And they're looking for any issues, deficiencies, or safety concerns. After the inspection, you're going to receive a detailed report. And here's what I want you to understand. Almost every single home will have something on that report. But don't panic. Don't panic. The inspection isn't meant to find you a perfect home. It's meant to make sure that you know exactly what you're buying. Based on the inspection report, you can ask the seller to make repairs, give you a credit towards your closing costs, or reduce the purchase price. Your agent is going to help you figure out what's worth negotiating and what's a normal part of owning a home. Now, if there are major issues that can't be resolved, you can walk away and get your money back. Except for in Arkansas, we don't really have to collect money. So, that's give or take. And that's when the inspection contingency protects you. The appraisal is different from the inspection. It's ordered by your lender, and it's done by a licensed appraiser who estimates the fair market value of your home. Your lender, they need this because they want to make sure that they're not lending you more money than what the home is actually worth. If the appraisal comes back and it's above the purchase price or around the purchase price, great, you move forward. If it comes in below the purchase price, that triggers a conversation. Sometimes the seller will lower the price to match the appraised value. Sometimes the buyer will pay the difference, and sometimes both sides meet in the middle. Your agent is going to help you navigate whatever happens. Both the inspection and the appraisal are there to protect you. They're not obstacles, they're your safeguards. Let's talk about those closing costs, because I know that's something that surprises a lot of first-time home buyers if they're not prepared for it. Closing costs are the fees and expenses that are associated with finalizing your home purchase. They're separate from your down payment, and they typically range from 2 to 5% of the loan amount. So on a $250,000 home, you might be looking at $5,000 to $12,500 in closing costs. Now, I know that's a wide range, and your lender, they're going to give you a more specific estimate early on in the process. But what's actually included in those closing costs? Things like loan origination fees, which is what the lender charges to process and underwrite your loan, title insurance, which protects you and the lender if there's any issues with the ownership of the property, an appraisal fee, prepaid items like your home insurance and property taxes that need to be funded up front, and the various other like fees that are related to the transaction. Now, here's the good news. Closing costs can sometimes be negotiated. A portion of your closing costs, like as part of your deal. This is what's called seller concessions. Not every seller will agree to them, especially in a competitive market, but it's absolutely something worth asking about. Your agent will advise you on when and how to make that ask. You can also roll some of those closing costs into your loan in certain situations, or use those down payment assistance programs that can help cover them. Again, there's options. The goal is to help you get to the closing table without being blindsided by anything. When you're getting close to closing, your lender is going to give you what's called a closing disclosure. It's a document that outlines every single cost and credit involved in your transaction, kind of like a detailed report. You'll have at least 3 business days to review it before your closing, and you should read it carefully and ask any questions if anything doesn't make sense. And know that by the time you sit down at that closing table, everything should be exactly as you expected. Okay, let's wrap it up with some practical tips for finding the right home, especially when you're working within a budget. Tip 1, know the difference between your must-haves and your nice-to-haves. Sit down and make 2 lists. The must-haves are non-negotiable, and like the number of bedrooms that you need, a certain school district, a maximum commute time. And the nice-to-haves are things that you would love, but you could live without, like a bigger backyard, granite countertops, an extra bathroom. Keeping these lists clear helps you evaluate homes more objectively and kind of helps you from being distracted. Tip 2. Think long term. You're not just buying a home for today, you're buying a home for the next several years at least. Think about where your life is going to be headed. Are you planning to grow your family? Do you work from home and need an office space? Is the neighborhood on a trajectory that you feel good about? A home is a long-term investment, and the decisions you make today should reflect what you want down the road. Tip 3. Don't overlook the bones, okay? In a competitive market, buyers sometimes skip over homes that need cosmetic updates like outdated paint or old carpet, dated light fixtures, because they can't see past the surface. But those things are easy and relatively inexpensive to change. What you can't easily change is the location, the layout, the lot size, or the structural condition of the home. If the bones are good, the rest is just details. Step 4, be realistic about your timeline. Finding the right home sometimes takes a few weeks, and sometimes it takes several months, and that's okay. Don't let the impatient push you into making a decision that you're not confident about. The right home is out there, and your agent will keep working until you find it. Tip 5, ask questions. There's no such thing as a dumb question when you're buying your first home. Ask your agent, ask your lender, ask the inspector. Ask about the neighborhood, the utility costs, the HOA rules, the age of the roof. The more information you have, the more confident you'll feel. I want to end this video just the way I started, by talking to you directly. If you made it to the end of this video, it tells me something about you. It tells me you're serious, you're doing your research, and you're not waiting for someone to just hand you all the answers. You're out here looking for them. And that's exactly the kind of person who's ready to buy a home. I know this process can feel overwhelming from the outside. There are a lot of moving pieces, a lot of new terms, a lot of decisions to make, but every single person who owns a home today was once in your exact position, wondering if they could do it, wondering if the timing was right, wondering if they were ready. You don't have to have it all figured out before you take your first step. The first step is just having a conversation. Get pre-approved, talk to an agent, find out what you actually qualify for. You may be surprised at how close you already are. I'm here to help you through this process every single step of the way, okay? Whether you're ready to move now or just starting to think about it, reach out to me. You can call me or text me, 209-985-6476. You can visit me at ar-property.com, or you can see me in person this weekend at my open house. The details are in the description. And if you found this video helpful, please share it. Share it with someone who you know is thinking about buying their first home. This information can change someone's life, and I'd love to help as many people as possible take that step towards home ownership. Thank you so much for watching. I'll see you on the next video.